Hello and welcome to episode 1 of the Future of Banking podcast. I'm Kimberley Waldron, co-founder and managing director of SkyParlour PR, and I'm your host. In this session, we'll be discussing how Fintechs can help SMEs through times of crisis and uncertainty, such as those we're all facing on a daily basis right now. I have with me 4 guests with a wealth of knowledge and experience in exactly this space, and they're all willing to share that with us. So welcome everybody. I have with me Ray Brash, who is co-founder and CEO of PPS. PPS is the driver behind many global leading prepaid and fintech programs. I also have Andrew Garvey, Chief Commercial Officer at Countingup. Countingup is a startup that's transforming banking and accounting for thousands of small businesses. Also joining us is Karen Rudich, with over 20 years experience in the banking sector. Karen is now CEO of ELEMENTARYb. ELEMENTARYb is focused on creating a data-driven banking model to improve financial robustness and resilience in SMEs. And finally, we have Fabrizio Zanollo, Director of Customer Success and Head of International Payment Services at Form3. Form3 is a payments business that was founded to create better experiences for customers and users when moving money globally. To find out more about any of our guests or businesses featured in today's discussion, please visit thefutureofbanking.info/podcasts. Thank you to our guests and listeners for joining us today. We've got a lot to talk about, I'm sure, so let's get started. So welcome everybody, and we're going to get started. I'll come to you first, Ray. If you could set the scene for us and perhaps talk a little bit about how the perception of fintech has changed in recent years.
Yeah, I suppose it depends whose perception you're looking from, doesn't it? You know, we're talking from the banks or the regulators or the investors or the customers. I suppose in terms of the industry, we've been in this area for about 20 years, and if I go back, the early fintechs, which did exist, guys like Wonga, I think was one of the first that I really thought were taking technology and financial services and making something really interesting. They were, I guess, niche, focused on very specific applications, maybe a bit marginal. So perhaps the traditional banks didn't really see them as a threat. Some of the early fintechs didn't probably take compliance as seriously as it needs to be. And I think a lot of them have learnt those kind of lessons. There was aspects of reliability, I suppose, in the early days, because a lot of programs were built quite quickly, perhaps not on great foundations, much more focused on speed to market than perhaps the long term. And that was probably the perception 5 years ago. And I think that has pretty much changed wholeheartedly now. Everyone is taking the fintechs, very, very seriously. The reliability generally has significantly improved, either because fintechs have sort of built their own technology stacks, or the players have invested. And when it comes to compliance, it's probably the biggest change. Certainly, what I see in the market for our customers and other customers is the investment that fintechs have put in compliance has been significant, because they really understand that when you're in financial services, you cannot ignore that, and actually it's becoming more of a burden for everyone. So I'd say a wholehearted change in the perception in the industry.
Yeah, it's not so much the alternative anymore, but sometimes the only option for the new opportunities that have opened up because
Yeah,
of the presence of fintechs.
for
And
sure.
I guess, thanks, Ray. And I guess coming to Andrew, I want to ask a question about how you think small and medium-sized enterprises feel about working with fintechs. And the key word there, I think, is feel. If you could perhaps give us your thoughts on that.
Yeah, no, thanks, Kimberly. Thanks for having me. I think for SMEs, usually just want to solve a problem. So I don't think they actually think too much about financial services generally. What they actually think about is, how does this product solve the problem I have? How does this make my life easier? How does it make it easier to run my business? And I think that dictates how they feel about fintech. So if a fintech is solving a problem, that means they can spend a little bit more time with their family, or they can access capital, or do whatever they need to make their lives easier, they're going to feel positively towards fintechs. I suppose if you kind of look how SMEs feel about fintechs as opposed to some of the incumbents, some of the sort of historic providers of financial services, I would imagine they probably feel more positive, because I think one thing that most fintechs would have in common is that they put the customer at the heart of what they do. Whereas once you get to a certain scale, once you see the sort of established banks, the big financial services providers, they become so process driven, and they have, Ray touched on compliance, and we're all governed by compliance, but you've got all the internal kind of governance that these giant organizations face that kind of keeps them a bit removed from the customer, layers of management. Whereas at Countingup, there's 25 of us, so we all have a connection to our customers. We know the pain that they're feeling, we know the problems we solve, and I suppose we're kind of more similar to SMEs than some of the bigger providers, because we are SMEs ourselves. Yeah. So I think that they probably feel that we're in their corner, I would say.
Yeah, it's such a broad church, kind of the SME categorization, and as you say, most fintechs would formally fall within that category themselves. So you're going through a lot of the pain points together, and I think that comes across in a lot of the value propositions that fintechs bring to market. And I think following on from that, it's not just about the technology always, is it? The relationship between a fintech and its customers, and perhaps Karen, do you have some thoughts on what else a fintech offers when it comes to working with an SME other than just the tech?
Yeah, I think so. An MME's critical pain point is around being able to understand what their choices, what their options are, and that is very much data driven. Understanding their current world and being able to look at the options and the choices that are out there are very much where we've seen a lot of gaps, actually. And unfortunately, this has a knock-on impact in their ability to make decisions, and those decisions to be sustainable in terms of they translate into product purchases, they translate into short-term and long-term risk decisions that have to be made. I think that is definitely where a lot of the fintechs can help those MMEs and those SMEs, because it's around using the technology, being leaner, and with that client focus at the center of how you impact their world, how you make the world better. And it's about accessibility, it's about transparency, and it's about increasing the pace of access to what is available in the market.
All of which is particularly important in the times we find ourselves in now, I guess. As we're kind of accelerating not just financial inclusion, but digital inclusion, and businesses quickly needing to implement the right tools and the right support at the right time to kind of make it through the challenges that we're facing at the moment.
Absolutely. And I think it's become, it's about the pace. I think it's about accessibility to drive sustainability of their business, about financial stability, and being able to almost have an insight into what the future may hold and stress test different scenarios, because it's very unfortunate what happened with COVID for a lot of businesses who are going through extreme stress testing at the moment. But having, in the future, how are we going to take the lessons learned from now to make sure that they're in a much stronger position financially and from an accessible perspective to prevent the big crashes that we're seeing now to their cash flow, to their working capital, and to their ability to survive.
Yeah, and I guess that's where not every fintech crosses over with the banks. Of course, fintechs are a broad church in the same way that the category SME is. But right now, a lot of the key solutions and the key things that small to medium-sized enterprises are looking at does have a crossover with the traditional banks, especially in some of the more transactional type of environments. And I wonder if, coming to you, Fabrizio, if you could perhaps talk to us about some of the specifics that businesses might see working with fintechs versus traditional banks.
Yeah, I mean, just to lay the foundation on that one, because I remember reading a report that EY, Ernst & Young, actually published at the back end of 2019, but was actually telling us that notwithstanding the huge fanfare that especially us working in the fintech sector have been making for the last few years, less than 20% of the SMEs actually have a business partnership with fintechs in any way, shape, or form. And that's got to do with specifically with a perceived lack of trust, which is only the byproduct of the fact that many SMEs and many fintechs actually don't have time and don't have money to invest too much in either market their products or mass market their products. They also don't have time in terms of the SMEs to actually do a proper investigation of the market to really check every single product, every single service that there is out there for them to implement. So naturally, their first port of call has always been historically to actually go to their banks. But the reality is that in the last 5 or 6 years, and I recall from my experience even in outside of the payment industry when I was actually working for QuickBooks, and Andrew could probably back me up for that. SMEs have taken a huge leap of faith, specifically in the accounting space, cloud accounting solution there, and actually making sure that they actually have a much deeper relationship with fintechs with regards to actually being able to actually have a clearer view of what where their business actually stands at every single point of the growth stage as well, and the maturing stage of the businesses from a different perspective. Because I think fintechs have been very able, very capable in the last few years to actually position themselves as being equally as agile and as flexible as SMEs are. Especially in the UK, we've really been able to position ourselves as strategic business partners for the SMEs community, and able to support them throughout all the 4 stages of their, not only throughout their launch stage, but throughout their growing pains, throughout the maturity of their business. And for the ones that actually have been able to mature beyond the SME and becoming actually mid-cap or even larger company, fintech solutions have actually been able to offer them opportunity to actually expand their horizon abroad, and also been able to provide them with access to the VC and the investor community there. So from that respect, I really perceive that the role of fintech in the eyes of SMEs has grown a lot, definitely in the last 5 or 6 years. But judging by the sheer numbers there is still a vast number of SMEs that can still do quite more with us as service providers there. And that definitely, I think that the opportunities and the challenges that COVID is going to represent for the SME community there are really going to make sure that most of them are going to be exposed to more and more of the solutions that sectors like supply chain financing, alternative lending, and also challenger banks are going to put out there. And you've seen lots of those like marketing news, and also lots of the services that have been broadcasted and have been promoted in the last 3 or 4 weeks there.
I think it's so interesting that statistic that I think only 20% of SMEs have worked with fintechs, because I think, not to turn into a statistic machine, but I think the World Bank says that SMEs account for 60% of all employment and 40% of all GDP. So it just shows that perhaps at the moment the capability of fintechs, what they bring to the market, isn't perhaps matching up to how the perception of the SMEs themselves. And that brings us on quite neatly to my next question for Ray, which is, do you think that businesses understand, or do you think that they see the benefits yet of working with fintechs? Even though we think being present in the fintech market, we think we're maturing, but do the businesses and the SMEs see that benefit?
Yeah, I think it's a really good point that Fabrizio makes, and I'm probably not the best person to ask this question. I'll have a go, but we work at PPS. We're a service provider to companies like Countingup, so I'll declare an interest there. They're one of our customers. So really, Andrew's in the best position to say. But what we see is, the same trends that you and I and my kids have in terms of digital, real-time, transparency, convenience. I mean, small businesses certainly value those as well. A lot of them are one-man bands, so why wouldn't they behave like us? So I think they certainly get it. They probably don't really differentiate between a fintech and a bank in that sense. They just see that there's a great app and it can do all the things they want, as we've spoken. So I think in that small business side of things, definitely the benefits of the convenience, but the value add as well. And a lot of companies, especially in this time, and I think the fintechs really come to the fore in this crisis, are offering so much more to their customers than the banks are, the traditional banks. And you really feel like you've got a helping hand, you've got a fairy godmother looking after you at a time of crisis, whether that's advice on applying for a bounce back loan or for deferring VAT or those sort of things. But I do think there is still an issue as you start to go beyond the SME, and it's no coincidence. I think a lot of fintechs are focused in that space because the larger companies are still, they're kind of joined at the hip to some of the traditional banks. That might be a systems integration. It might be, that's the way they've always done it. And so there's still a job to be done. And I was seeing a post from Oliver Prill, the CEO at Tide, who was kind of complaining a little bit that the early few days of bounce back seems to be focused on the big banks who seem to be offering the bounce back loans because they got kind of early permission and they're not really coping with it, in terms of capacity. So even in this example, there's an opportunity to open it up. So I think, to answer your question, yes, the ones that get it absolutely see the benefits. But to Fabrizio's point, there's a long way that the market can be penetrated. So, fintechs can really start working with companies with 500 people, not just 50.
Yeah, if I may, actually, we did quite a bit of research more on the upper end of the SMEs, so those that have more around the 10 to 25 to 50 million pound annual turnover. And what we found is that they have quite a bit of complexity into their businesses. Who have, if you think about the manufacturing industry, the hospitality industry, they have grown inorganically. Actually, that was a bit of a surprise to us. They have gone from a tiny little mom and dad shop to now multi-million pounds of annual turnover. Their systems have not kept up to track. Most often than not, they're still, around 50% of the time, they're still founder managed. And therefore, we have a generational gap in terms of interacting with technology. And I think what we were seeing was that over the next 5 years, there was already going to be a massive shift towards becoming more digitally savvy for those businesses because of the international situation, but also because of a generational handover where those original owners that had founded those businesses are now at a stage where they're looking to retire and either hand over to the next generation or sell their businesses. So I think we'll be going naturally through that transition phase, and that will drive more engagement with the digital. But I think as financial services providers, we need to be able to be there to respond to the complexity that some of these businesses will have, which currently those needs are not being met. And this is where we see a lot of disconnection between financial services providers, be them fintech or challengers or traditional banks, not necessarily meeting the needs of those companies because they don't really understand, and those companies don't fit a standard template either.
Yeah. Thanks. I was going to come to you, Karen. So I'm glad you jumped in there based on, the fact that you guys kind of focus in more on that mid-tier side of SMEs. So thank you for that. And, I could now on Ray's recommendation come back to Andrew, because are we now at a point of a change for the fintech market based on the crisis and what Karen said? Are we now coming to the point where this is the opportunity for fintechs to step up to the plate and to help businesses that are going through the certain challenges that they were facing anyway, but have now been heightened by the global crisis? And what can the industry do to take on that responsibility and step up to the plate?
Yeah, I think every fintech that deals with small businesses has a responsibility, particularly in a crisis, to kind of deal with the challenges those businesses face. Speaking specifically about Countingup, we provide our customers with their banking and their accounting. And to Fabrizio's point, if they're relying on our accounting data, that's vital information that's going to enable them to go and apply for grants or work with their accountants to kind of chart a course out of this. So there's a big responsibility. But I think the opportunity is huge. We've seen over the last 8 to 10 weeks, there's been a huge shift in terms of the use of digital tools from big companies, small organizations, even personally, people. I set up a Zoom call for my kids' football team, for them to keep in touch. So I think there's more. How do I put it? There's more acceptance of using digital tools, and that's going to apply for SMEs. But I think you have to solve it. Coming back to my original point, you've got to solve a problem. So going into this in terms of responsibility, the thing that SMEs are looking for right now is information, and to feel like, I think someone used the phrase a fairy godmother. So we built some calculators to kind of work out how much these guys could access in terms of the furlough grants, the self-employed grants. We created a COVID-19 help centre, because ultimately they see us as their banking providers. Their first protocol is, how on earth am I going to get through this? And I've also seen this from our accounting partners. Most of our accounting partners have been working ridiculously long hours to deal with inquiries from these SMEs because they're a bit scared. And I think the first thing right now is there will be opportunities that come out of this crisis for fintechs, because people will reevaluate how they've been running their businesses. And I think that applies whether it's a one-man band or a huge company. My wife works for a law firm, I think over 1,000 people, and they've all gone to working remotely. Countingup, there's 25 of us, we've all gone to working remotely. I just came off a call with an accountant who specialises in one-man band businesses. They've all switched to having Zoom calls. So the opportunity is there. But I think right now the responsibility on fintechs is to make sure as many of these businesses survive as possible, give them the support they need. Information is probably key, and that's the most important thing. Make sure as many of your customers survive and come out with stronger, then actually use this as an opportunity as a springboard for them to grow. So I think that's the responsibility.
Yeah. I agree, and it'd be nice to think that the fintech industry as a whole, are looking at themselves, looking at the competitors, and looking at the industry as an ecosystem that's there to support, to grow, and also wants to come out of the other side of this crisis itself, because it's got so many vital opportunities are presented by the fintech market, that we also want many of the fintechs to survive as well, because of course that's going to be a priority for some of them who are also going through some of the challenges.
I think just on one more point, to Ray's comment around the tide statement around the existing banks are finding it difficult to distribute the funds quickly enough to business. I think that's been a common theme that we've seen. It's great having all these schemes and loans, but some of these small businesses won't make that bridge. They won't make 8 weeks between not having any revenue and receiving the funds from grants or actually from loans. So this was an opportunity, I think, for government to partner more with fintechs, and we've seen they've just gone back to the default setting. We've seen hundreds of millions of pounds distributed in terms of the Banking Competition Remedies Fund to try and instill competition in business banking. A crisis happens, and all of these schemes, the big advantage is given to the incumbents again. So I think it's a bit of a missed opportunity from that perspective, if I'm being honest.
Yeah, well, I was last week on a panel around SME lending, and a very interesting statistic kicked up around the fact that in the US, you've been able to see the liquidity that the government has issued hit the balance sheet of small companies within days. And that's because they've used 75% of lenders are non-main bank lenders. They're alternative lenders, challengers, fintech, etc. Whereas in the UK, 75% of the funds have been issued or are allocated to the big banks. And yet very little of that is being supported by alternative lenders who have a much more digital time to market and speed capability to be able to get those funds into the companies that need it most urgently.
Yeah, 100% agree.
Does that, do you think, come down to kind of institutional type behaviour, or is it down to the genuine trust factors?
I don't want to sort of cast aspersions, but two of the mainstream banks are pretty much owned by the government. So I suppose there's an incentive you can get them to do. You can get them to do things a little more quickly if you're a major shareholder. But I'm
It's
sure
it's
that
an
wasn't motivation.
I think it's an incestuous incentive, that one that we've seen in the UK, unfortunately. But even in Italy has been exactly the same experience, to be honest with you. Although there have been hot pockets of interaction between the local chamber of commerces and the actual fintech community in various, not only from a credit and a retrieval of funds perspective, even in terms of actually managing to move SMEs from offline to online purchases. Because the very interesting statistics, and I don't want to be the man of the statistics in our podcast, but anyway, I'll throw this one as the last one, from the Chamber of Commerce from my region, from Calabria, which is a very kind of like service-based, quite backward and agricultural region in the south of Italy. But they were saying that around 28% of adults in Calabria have actually made their first online purchase in the last 2 months since lockdown. And I saw that with my parents that never actually had any online purchase made. They didn't even have a credit card up until 6 weeks ago. Yeah, so I've actually experienced that firsthand. And the actual local chamber of commerce, in order to facilitate the switch from offline to online, have actually entered in specific arrangements with the likes of PostePay and Satispay in Italy to actually been able to move with very simple SDK, very simple link, like almost like ad hoc web link, to actually facilitate the move from offline to online, and actually manage to keep afloat hundreds of businesses in the region there.
Mm-hmm. I guess that's where,
if you don't mind, my opinion on that varies a little bit. I actually think the reason why the government chose to send most of the funding through the banks was a bit of legacy thinking on their part, because it's a risk-based decision to say, okay, who are the ones that service the most millions of customers that can get the money into the hands, actually, without understanding that a lot of these banks are businesses. They're commercial institutions that have shareholders that still have to perform. And therefore, they're not a vehicle for the government to then distribute, right? They still have their own internal governance to adhere to. And I think the second challenge there was that although the UK is known as one of the most digitally advanced, or having one of the most digitally advanced and friendly regulators around the world, there's a bit of a disjoint approach between the ambitions of the regulator and then the ambitions of the government. They haven't necessarily kept up to pace, because it's down to delivery and execution and risk appetite. So I think we're going to see a shift where the ambitions of the government and the ambitions of the regulator and the regulatory environment here in the UK, as well as the financial providers, are going to change for the better, to start aligning their priorities. Because at the end of the day, it's a massive economic challenge when these priorities are misaligned, and then it's the SMEs and the MMEs that are actually suffering that bottom line P&L impact, and then employment starts getting impacted, and all the knock-on impacts happen. So I think, again, it's going to shift us, lessons learned for the future. But I think it just looked like an easy solution for the government to just funnel that money through a distribution network that perhaps they underestimated the handcuffs that they already had as commercial institutions on.
Yeah, and I think it's absolutely the case that the government has been weak on this one. Obviously, the CBIL proposition was pretty damned in terms of, you have to use your same credit criteria. It's 80%. If you're a bank, you lose 20% of your loans. It doesn't make it any better, does it? So I think Andrew made a great point. The government is guaranteeing a loan from a bank that it owns. Just give the money straight away to the SME. Cut out the middleman.
I think that's a great point. And one of the things I would say is, I think this shows the disconnect between the large organisations that interact with SMEs and the self-employed. If you're HMRC, the government, or a large financial institution, if you're working within those organisations, and this is a bit of a sweeping statement, but there's layers of people, there's a huge bureaucracy. If you're a one-man band plumber here in South Wales where I live, right, and you've got 8 weeks without any income coming in, that's terrifying. And I think sometimes these large organisations forget, we're not talking about their definition of business. Often is the 10 to 25 million pound businesses, the ones they interact with, the ones that lobby them, the ones they see on a daily basis. The self-employed and the genuine SMEs, they don't really understand how these guys live. and they don't understand it. It's often, month to month, and the 8 to 12 weeks waiting for these guys to get cash in to pay their mortgage. I know there's been mortgage holidays, but to put food on the table. I think it's just shown that the whole of society relies on, particularly the 1 to 4 employee business, to generate wealth, to deliver services, but it doesn't cater for them, and it doesn't provide the support or the infrastructure they need. And this, to me, has just crystallized it.
Notwithstanding, they still make 850 billion in revenue from them every year. That's the reality there, isn't it?
Yeah.
Well, I guess that brings us round to a little bit to the kind of societal and moral obligations that are going to come into play, especially as we move more back to the new normal. And I guess a lot of SMEs are going to be rearranging their business and changing strategies based on the change in consumer behaviour and how consumers want to access financial services, how they want to interact once we are allowed to go back to coffee shops. And this is perhaps where, the fintech market is positioned well to help level the playing fields for businesses of all sizes, from local coffee shops to chain stores who, if consumers are going back, they don't want to pay at the counter anymore. They want to sit at the table and pay. There's lots of examples of creative ways of keeping people apart but together. Perhaps that's one for you, Fabrizio. How is the fintech, and perhaps on the more transactional side, of the payment side of things, going to support SMEs getting back to work and opening and catering to changing consumer behaviour?
Yeah, no, that's a very good question. And as I said, I think as I was saying earlier on, I think already the fact that we, as a transactional kind of society, as a transactional service provider society, we already kind of like understood that we need to kind of like make sure that the offline and the online world are going to be able to cooperate in a much more efficient manner. So that's going to be seen at point of sale there. That's going to be seen, as you said, even when people do return to cafes, do return to cinemas and gyms and all that, we're going to be seen, I think, and that's actually a question that I want to ask the rest of the panelists as well, and maybe we can touch that upon later. We're going to be seen in a change, in like changes that are going to be quite fundamental in the way we behave as human beings and in the way we expect our service provider to behave with us. So I sincerely believe that SMEs are going to require a much more enhanced degree of empathy from us as a service provider to the real pains that they are suffering now, and to the pains that they're going to be suffering when the lockdown actually is eliminated and society is supposed to be slowly but surely actually opening up again. Are we going to be able as service provider to actually fully understand all of the pain points that SMEs are going to have? Are we actually going to be able to forecast all of the pain points that they're going to have? For example, I understand that the payments per se and the transactional aspect of payments is going to be something that is going to be tackled. It's probably going to be one of the first things that is actually going to be tackled well, just because the sheer amount of the volume and values of it are actually going to have much more of a concerted effort from the community of the SMEs, but the community of the fintech provider, but also the traditional banks on the back as well. So I know that that's going to be resolved. But what about some other aspects of it, like the supply chain financing aspect of it and the debt collection of aspect of it as well? I mean, are we going to be as an SME kind of like service provider community be able to make that switch so that we're going to be able to really digitize all of those other services there, so that we're going to really be able to present the future, the new reality there for SME as being as worry-free as possible? Because I don't think there are some aspects of it that have really been fully thought through, to be honest with you. I'm really concerned about the debt collection aspect of it. I mean, I worked back in the days when I was at HSBC. I was working in the loan administration unit, and I was dealing with like all of the major tier ones and syndicated bank facilities in Europe. But I remember when I was actually going down to the nitty-gritty of dealing with the SMEs on the back end of the internet bubble bursting in 2001 there, I actually had to deal with like directors of large SMEs, the one that Karen was actually mentioning earlier on the one that were actually generating already back then over 10 million in turnover. And the reason why most of them actually failed was the fact that there was no real measure in place that was actually making the debt collection a much more efficient process. And the majority of them actually were unable to actually collect any of their debts, or even a portion of their debts, within 90 to 180 days from actually that debt being accrued. And that actually triggered probably around 150,000 of those businesses actually going bust back in 2001 and 2002. So my real point that I'm trying to make here, I was reading something from Silicon Valley Bank the other day, where they were saying that round about 70% of the businesses that are up and running now, they've never experienced a recession. 70% of the fintech providers that are out there now have never actually lived through a recession either. I know that we are all full of great promises and great purposes there, but I really want to, and I want to ask that question to the rest of the panelists there. Are we sure that we are all going to be able to fulfill our promises there? Because most of us have never actually gone through any recession or any of this extreme situation where we actually reinvent ourselves and had to follow pain points that we didn't even envisage out there.
Perhaps that's one for you, Karen, because to start with.
So
is there too much out there? How do businesses navigate through all of their options?
So I think as financial services provider, it will be down to us to collaborate and to really be able to, again, it's the new paradigm around data. And there's that power in being able to drive, to link data, to gather transparency, to be able to look at options and choices, and then to be able to surface choices for the companies that actually enable them to see the wood from the trees. Fabrizio mentioned around trade and supply chain, right? Being able to understand what are the families of products out there that a company could access, not just throw them 10,000 solutions out there, but say, okay, you are this type of company, this is the risk profile that you have selected, this is the kind of trading activity that you have in the markets that you're exposed to, and actually using intelligence. And this is where technology is a beautiful thing. AI, machine learning, all of that has been around since I came to the UK back in the 90s. And it's just gotten more and more interesting and more capable, but it's a lot of financial providers and a lot of fintechs are fantastic at one little piece. I think if we start collaborating, we're able to put that entire end-to-end chain to really start turning the tables and benefit the companies to say, look, we've collaborated. This is the data that you've shared with us. These are the options that we are trying to surface for you. Here's how you can model some of the impacts, because it's down to their choice will be an emotive choice as well, depending on how they want to run their business. It will also around enabling the integration of their existing advisors, because that brings the trust element to it. And then be able to select the things that they choose for themselves, that fit their needs, and be able to or actually deliver those products quickly. Not take 6 months to then review applications, to fill in 300 pages of information. But this is where, to me, digitization and technology really have a key role to play in order to translate that need and that environment and that trading capability, collaborate together to then into something that's actually going to help those companies in a fast-paced manner.
I think just adding, I think Karen and Fabrizio touched on it here, but a lot of small businesses, and Karen, you mentioned it in your previous comment around these large organisations having to digitise because of the generational shift. I think one of the things that FinTech can really do, and one of the things we're working on for a particular segment of that, is giving them a better understanding as to how their business is actually performing. So to Fabrizio's point about debt collection, a lot of guys, the smaller businesses, if they're running manual records, the only time they look at their accounts is, after the year's ended, just to make sure how much tax they need to pay. They're not getting that kind of real-time access to, there's going to be a cash flow gap between, September and November. So I probably do need to look at some kind of short-term financing. How do I get those options? Often they'll turn to an accountant. So I think that's a real opportunity for FinTech, is to make it easy for these businesses to collect the data, put it in a way, and present it in a way they understand, allow them to collaborate with their advisors, allow them access to multiple sources of finance or other financial products, I think that's a real win. Just going back to, I read the competition and markets report on the small business lending market a while ago, and a lot of these companies are using credit cards and overdrafts because with their existing banking provider, because that's the easy route, right? And these are the guys who have the data because they know what comes in and out of a business. They can make a judgment call much easier than if you've got to troll through spreadsheets or boxes of receipts or whatever convoluted, accounting system some of these guys are using. I think that's a real responsibility on fintechs, is to make it easier to run a business and give them access to the best products. And you do that by creating data in a better way.
And promoting improved financial governance, it's something that a lot of fintechs talk about in the media and is a selling point, but what's the reality of it? And I think how quickly so many businesses have perhaps felt the destruction of the COVID-19 crisis does highlight the fact that financial governance hasn't been a priority for many SMEs, and it's a moving feast as well, with all of the different technologies and the opportunities that fintechs bring to market. I mean, Karen, I know that you had some thoughts about how important financial education is for SMEs, and I guess Andrew covered it a little bit, the role of fintechs there. Did you have anything to add?
Yeah, I think, the challenge as a CEO is that you don't really want to get an accountancy degree, but you learn very, very quickly that it's not something that you can turn a blind eye to. So the last company that I had, we almost went bust. 80% profitability, nearing 10 million pounds of annual turnover. And suddenly you start realizing that the cash to bank or the debt to bank are certain ratios that you need to look out for. And your Google education in accounting never kind of prepared you for that. So I think it's more around being able to not necessarily educate company boards and company senior management, but be able to enable, I guess, give them control of the tools that allow them to understand what the knock-on impact to their customized journey is from example from different family products. So part of our MVP is to deliver a compare and contrast on their cash flow on what is the difference between an asset financing product, an invoice factoring product, and a traditional lending product. And once you then choose of those families, because sometimes we don't actually know what the nuances are and the different of those choices, and what are the long-term implications, and how does that look on your cash flow forecast, and being able to bring it back in and then say, okay, you've chosen this family of products, then here's all the different providers that you already qualify for, and what the knock-on impacts and terms and conditions are something that unfortunately are not very standard, and that's where a lot of companies get caught out. And so it's around being able to surface just the key metrics that enable them to make the right decisions that are right for them and their companies.
Exactly. And I mean, we're coming closely, very quickly, and we've got, I suppose, still got some things that we want to cover off towards the 40 minutes, but we've spoken about fintechs and banks as if they exist in completely different lanes. But of course we know that they don't, and there is important relationships there. But perhaps, Ray, if you could talk about how the COVID-19 crisis might develop, change, break, or just evolve the relationships between fintechs and banks.
Yeah, sure. And Karen, I'll declare an interest. I do actually have an accountancy degree. So, yeah, it's a really good point. You talked about fintechs and banks being in different lanes. Well, as someone, we support Metal, which is NatWest's challenger bank, and it actually is in a different lane. So that's probably a simple example.
Yeah.
I can't see how the relationship is, well, the relationship was probably a bit agnostic before. The big guys, these pretenders are coming in, we're not going to be too serious about it. As I said at the very beginning, that has certainly changed in terms of the perception, and obviously banks have spoken to challengers about potentially acquisitions, and there've been a few collaborations. The loot working with RBS didn't really work out. I can't see how it's going to get any better. I think it's probably, if it's going to stay the same or maybe even get worse. If you look at it from a traditional bank's point of view, they were not in great shape going into COVID. And if you use the phrase "fix the roof when the sun shines," they didn't really fix the roof, and now they've got 5 to 10 years of trying to deal with the fallout of COVID on top of what they already had. So, we talk about government-backed loans. Well, obviously, the vast majority of commercial loans for banks are not government-backed. So I think dealing with defaults for the next 5 years is going to be a big, big issue for banks, as well as obviously relatively low levels of inflation, interest rates, and increasing regulatory burdens and capital requirements. So I think banks will just be focusing on that. Add to which legacy, both in terms of technology, but also the retail branch network, which is an issue before. It's even more of an issue now. So everything's gone worse for the banks. I can't see any way in which anything has got any better for COVID. And if you flip it round, I think it's been a moment for the fintechs to really step in and show what they're capable of. And despite the best efforts of the government, they've actually done that. And I've been incredibly impressed with all of the either my clients or my competitors' clients, what they've been able to do to bring that sense of community, as Andrew talked about, really putting an arm around the shoulder of their customers and helping them through this. Now starting to see how they can channel loans and grants. Now, I don't think small businesses are necessarily loyal. They're not going to say, well, wow, you really helped us out. I'm going to stay with you for 20 years. And obviously, small businesses come and go. The level of kind of turnover is probably higher. But I think it will be a defining moment. Uh, Clearly, investors still have to support most of the fintechs. So that's something that is out of the fintechs' hands to some extent. But I think most of them are showing how relevant they are in a crisis, even before a crisis. So I think investors are still putting money into fintechs. We're seeing that every day. So I think the relationship, I think it will carry on. And I think, if anything, the fintechs will come out of this having been through one crisis. As Fabrizio said, they maybe hadn't before. They've seen how they've adapted. They've seen how their customers have adapted, and most of them clearly can adapt very well to it. So I think, frankly, this has been a real sort of game changer for fintechs, and they will be stronger. I think more successful. I think the future is very, very positive for fintechs, actually.
Mm. It's certainly showcased, I would even say, been some inspirational moments, as you say, as you touch on, with some of the responses from the fintech community at this time.
Yeah, we're looking, obviously, without going into too many details, our business activity is, I wouldn't say it's not growing at the speed it was before COVID. I think that's fairly obvious because the economy clearly is smaller, and generally all the marketing budgets are being pulled. But there's a lot of activity in our client base. Those businesses are still very vibrant. They're still providing a very strong service, which is valued. So by no means is there a collapse in their business. In fact, I'm seeing volumes in April higher than January, for example. Yeah.
Well, that's a very positive note, I think, to come to. And I think the kind of raw and pragmatic insight that you've all shared today is hopefully some small contribution to the collaboration that we all need in the industry to help our clients and our peers through this difficult time. So thank you, everybody. I'd just like to end by asking a question, and we can, we may have to edit this so it's smooth, but I'd like to finish just by asking a question to each of you, the same question, which is, why is that relationship important? Why is it important that fintechs exist? Go to you first, Fabrizio, if that's okay.
It's important because, as I said earlier, fintechs have always shaped themselves as being the most agile and flexible player in the market there. And that's what SMEs actually expect. And our ability to actually pivot well in advance of the giant monolith of traditional banks out there in the market have always been the key to our success. And to be honest with you, I'm even seeing that from a buyer's perspective, from what we are doing at Form 3, where we've been able throughout the COVID actual pandemic there to keep the level of interaction with both the fintech world and the traditional bank world, and to almost to pivot our role as an agnostic player in there, to make sure that then the service that both of them can actually provide to the SMEs is as enhanced and as efficient as possible there. So I definitely think that the fintech players, the fintech participants there are there to stay and are there to learn and to position themselves as strategic business advisors. to the SME community. And as I say, both from experience and from what my heart actually tells me, and from what I'm hearing from community and friends throughout Europe, I really believe that fintechs are doing even beyond what they were expected so far, and quite a lot of the SMEs are actually taking stock of the way we are behaving there. So hopefully that's going to bode really well for the future of our interactions there in the years to come.
Yeah, and Karen, same question.
Yeah, I think fintech are there to challenge the status quo, to keep forcing innovation, and innovation that works for the companies, for their clients, because that is the business model that startups have embraced in today's world. It is about always making sure that you are not just taking it lying down, and you are there to protect the economy. You're not constrained by the same shackles that the big players are constrained. You're more nimble, you're able to collaborate and work faster. And I think without that innovative element, the economy won't be able to get back up in track. I think Andrew, Ray, and Fabrizio, mention that as part of their discussions, and it is so important that we keep always challenging the way that things work, improving on it for the betterment of society and our economy.
Yeah, and Andrew, how about you?
Yeah, I think in the UK, if you look at the traditionals of banking model and how they've approached SMEs, SMEs tend to have, I think, 4 times the balance in their current accounts as personal current accounts. So the model has been for the traditional banks, take those deposits, use them as cheap capital to lend, predominantly for residential mortgages or consumer credit. That's how the model works. So SMEs have always been seen as a source of cheap capital. I think what fintechs do is they apply a creative destruction to the process and say, look, we want to put the customers at the heart of this. This is about delivering a product or a service that makes SMEs' lives easier and makes it more likely these SMEs will be successful rather than just as a source of cheap capital. So I think fintech is absolutely vital, to, not just for financial services, but for the health of the SMEs in the UK and the world generally. So I think that it's an absolute key role.
Very passionately put. Ray, any final words then on the importance of the relationship between fintechs and SMEs?
Yeah, I think it's the metrics that Andrew was talking about. None of the fintechs I see start off on the basis that this is a source of cash that we can make money from lending, which is exactly where a bank will come from it. And in the public domain, you read, between Bow and Metal, one of the things Metal was called out for was its level of engagement. And you will see SMEs look at their engagement with a fintech partner, and they see all of the things that are being offered to them, and they're probably waking up and saying, how did I ever survive without this? This is what a real service is about, because primarily the fintechs, they're not, they're looking at lots of different ways to monetize and engage with their customer base, and they know that engagement and the use of their products, use of the app, that community, that connectivity, those are the success factors, not the size of the balance sheet. Now, if you get the first thing right, the balance sheet comes afterwards. But you've got to focus on those things first, rather than just look at credit risk, lending, blah blah blah. And I think it's the metrics that make the difference, and that's what I would say.
Great. Well, thanks everybody. I think that kind of the insight and the passion that all the panelists have had today shows what fintech's really about, doesn't it?
Thank you for tuning in, and thank you to our guests, Karen, Ray, Andrew and Fabrizio, for being kind enough to share such candid knowledge, insight and experience with us on such an important topic. I'm Kimberley Waldron, I've been your host today, and I look forward to catching you again on the next episode of the Future of Banking podcast. Please do go ahead and visit thefutureofbanking.info/podcast for more information on any of our guests and on forthcoming episodes.